Hey guys, welcome back to the channel. In today's video, I'm breaking down fair value gaps, and trust me, I'll explain it so simply that even if you're completely new to trading, you'll get it right away and be able to use it in your own charts. Alright, so let's start with the basics. A fair value gap, or FVG, is a three-candle formation where the wicks of the first and third candles don't overlap the body of the middle candle, and that creates a gap in price. Now, what does that actually mean? It simply means there's an imbalance in the market. Price moved so fast that it left behind unfilled orders, and sooner or later, the market usually comes back to that gap to fill them before continuing in its direction. So, in simple words, these gaps are areas where the market still has business to finish. Now let's talk about a bullish fair value gap. A bullish FVG forms after a sell-side liquidity sweep, and you'll notice a gap in the second candle. Price usually comes back, taps into this gap, and then pushes higher. Here's an example. So we've got a sell-side liquidity sweep right here, followed by a three-candle formation. The middle candle creates a bullish fair value gap, and notice how price comes back, fills that gap perfectly, and then continues moving to the upside. Now on the flip side, we've got a bearish fair value gap. This one forms after a buy-side liquidity sweep, again with a clear gap in the second candle. Price comes back, fills that gap, and then continues lower. Here's another example. We've got a buy-side liquidity sweep, followed by three candles where the middle one creates that bearish fair value gap. Watch how price taps right back into it and then drops to the downside. So that's the simple breakdown of fair value gaps. Once you start spotting these on your charts, you'll see how powerful they are when combined with liquidity concepts. Let's move to the charts and see some examples based on fair value gaps. Let's look at our first example. Here we have a 15-minute sell-side liquidity sweep. After that, we'll drop down to the 1-minute time frame and look for a fair value gap. Now we can see a clear fair value gap, so we'll mark it out and place our long position at the consequent encroachment of the gap. Our stop loss goes below the recent low, and our target will be the recent highs. Price triggers our order and quickly hits our target. Clean and simple. Now let's move on to the next example. Once again, here we have a 15-minute sell-side liquidity sweep. We'll drop down to the 1-minute time frame and we can already see a fair value gap forming. We'll place our long entry on this gap, keep our stop loss below the lows, and target the buy-side liquidity. Here, the market triggers our order, moves sideways for a while, and eventually pushes higher to hit our target beautifully. Now, let's take a look at the third example. This time, we have a buy-side liquidity sweep. Once again, we'll drop down to the 1-minute time frame and look for a fair value gap. Here we can see a bearish fair value gap forming. We'll mark this zone and take a short position from the gap, placing our stop loss above the recent high and targeting the recent lows. Once again, we get a quick and clean target. In our last example, we have another sell-side liquidity sweep. We'll drop down to the 1-minute time frame, spot our fair value gap, mark it out, and take a long position from that gap. Our stop loss goes below the low, and our target is set at the recent highs. The market triggers our entry, pushes to the upside, and hits the target perfectly. Now, I think you've got a clear understanding of what a fair value gap is and how to use it effectively. Keep your approach simple. Don't overcomplicate it. Just remember, look for fair value gaps below the discount level for long setups. Look for fair value gaps above the premium level for short setups after a liquidity sweep. Follow this process consistently and you'll start seeing results over time. And if you want to learn more ICT concepts in a simplified way, check out my other videos on the channel. Also, make sure to join my Discord server and Telegram channel. You'll find PDFs, trade breakdowns, and a lot more educational content there. Thanks for watching, and I'll see you in the next video.